Today's economy shifts way faster than it ever has in human history, and you constantly have to be evolving and adapting your strategy, especially as an investor in today's world. So I'm excited to chat with our guest today, Dan Rowley. He's a partner at real estate syndication firm Spark Investment Group. By the way, no relation to Spark Rental. I should put that out there. And Dan recently ditched his day job after 31 years in corporate finance to become a full-time real estate investor with Spark Investment Group. And his strategy, his real estate investing strategy, has changed a lot over the last 14 years that he's been in real estate investing. So, Dan, I'm curious to hear how you have constantly kind of stayed one step ahead of that red ocean of, bloody sharks all competing with each other and stayed in a blue ocean, even as, the economy keeps evolving at record breakneck speed.
Yeah, I think I would say I have been try to be adaptable to changing market conditions, and instead of just sticking with one strategy uh, that may have worked, it maybe doesn't no longer work as well. I've tried to adapt. So to give you an example, I started buying rental properties in about 2011, and I got to about 20 rental units over 6, 7 years of doing that, and it was working great. I picked up some properties at really good basis, after the correction with the mortgage financial crisis and all of that. And so picked up some really good deals. And the cash flow was actually probably better, much better than I projected, and appreciation was working well. But I found in 2018, 2019, it became much more difficult to identify and find, deals or properties that made as much sense. They didn't pencil as well. They didn't produce as much cash flow with the typical 25% down scenario. So instead of fighting that, I then kind of started to plug into the group investments, the syndication type investments, multifamily and a few other types of assets. But what I was finding at that point in the market was the returns were more attractive, higher cash flow during the deal. Um, with 4 or 5 year holds is what is typically modeled. I think the expectation was that uh, I could get better yields and better returns in the group investments than I could in owning rental properties. Plus, it's entirely passive, right? When you do own your properties, you might have a property manager manage them, but there's still a lot of work you got to do, you know, as an owner versus a limited partner investor where you're entirely passive. So the trade-off was certainly there. I could see probably be better returns. There's some economies of scale with larger commercial assets, um, that seem to kind of tilt in their favor. And so again, instead of just trying to put a square peg in a round hole and try to find rental properties that were increasingly harder to find, I pivoted and started investing in a lot of the syndication type deals. And that worked out well for me. I think that making that pivot at that point in time.
Yeah,
So
now so you started as an LP, a limited partner investing passively in real estate syndication deals, and then you pivoted to become a general partner, a syndicator yourself with Spark Investment Group. So, walk us through that transition, how you made that leap.
yeah, good question. It was about 4 years ago. Again, I was actively investing in deals. I kind of have a bias towards higher growth markets, and I'm certainly also I like secondary and tertiary markets that are experiencing high growth. So I got keyed into Greenville, South Carolina as a market, and then I met a guy named Martin Cinedello who's the founder of our group, and he was sponsoring deals there. And so he and his partner also had vertical property management, so they had integrated property management. So I like the market, I like what they were doing, so I took a little chance. I invested with them on a couple of deals, and then over like 2 years, I invested 3 or 4 or 5 times with them, and I was able to get to know them, and I was able to see that they were extremely strong operators. Like all their deals were performing better than expected, and they knew what they were doing. All the reporting was frequent and concise, and they really knew the market. So to have a local presence, boots on the ground, I felt like they had all those things going for them. So I started by investing with them. I really liked what they were doing. I got to know them on a personal level. Went down and visited, and then we determined that it made sense for me to join their team because I have some skill sets and core competencies that maybe they don't have in terms of financial management, underwriting, cash management, my financial background would be useful for them. So, and they have kind of all the other skill sets covered. So we figured out that there were synergies. And then I joined them as a general partner, and we've been doing deals for the last 2 years together. And of course, certainly I've been investing in the deals that I'm sponsoring as well. So that's kind of how it evolved from investing with them, kind of seeing how they were doing, understanding that they really knew what they were doing, and then I'm grateful for the opportunity to join their team and kind of round out their team. And we continue to look for deals there. So
Yeah, so and we've actually had Arn on the show as well before. So yeah, no, I love what you guys are doing. And that's been my personal experience as well, that you can find better returns on passive real estate investments than going out and buying rental properties yourself. That's been particularly attractive to me living overseas. You know, it's been easy for me to just, hit a wire transfer, from South America or wherever I happen to be in the world to invest in real estate syndication deals or private partnerships or private notes or equity funds or any of the other things that we invest in every month through our co-investing club. It's way easier to do that from anywhere in the world than to try to go out and buy individual rental properties without having ever seen them in person or trying to manage contractors and renovations from afar. I mean, it's a total nightmare. Likewise with dealing with permit inspectors and all that kind of stuff. That's just it really requires you to be present. So yeah, I too have definitely found not just easier investing in passive real estate investments, but also higher returns, frankly, higher annualized returns among passive investments that don't require me to lift a finger in labor. So yeah, I'm totally on board with that. And one other thing that jumped out at me in your story is not only did you keep kind of ratcheting up your investment game, as you evolved, beyond the single family rentals and then beyond multifamily rentals to passive real estate investments and syndications and then becoming a GP, but you actually got a new job working through that process of pivoting and evolving. You actually ended up with a new job and a new career beyond the corporate finance that you were doing originally. And it seems to suit you. It seems to suit you well. So, yeah, Dan, any final thoughts on any of that before we wrap up?
no, I think you've covered it. I think also our group is pretty. I think we found that we had similar investing philosophies. We don't really care to 10x it. We want to grow slowly and steadily. And in fact, we probably are glad we didn't buy a couple deals that we were looking at a couple years ago, because there's a lot of operators that maybe got a little bit over their skis and bought stuff at the very peak,
No
and so
question.
variable debt and so forth. There's a lot of scenarios out there that people can see that sometimes the best deal you do is one you don't do, right? And I think we feel good that we only bought the deals that really made sense, and we're not in a hurry to acquire assets under management. We just want to buy deals that make sense for our investors. So that'd be the one maybe final point to make, is that quality over quantity is kind of our mantra.
Absolutely. And yeah, I mean, we're excited to invest with you guys in the co-investing club to bring you guys in and feature one of your upcoming deals, hopefully in 2025. So, Dan, in 30 seconds or less, how do you help people and how can people connect with you if they want to take you up on that help?
Yeah, I'm always happy to talk to people about real estate investing in general. They don't have to be somebody that's interested in our deals, but I just like to network and talk real estate. It's been it was a sideline. Now it's what I'm doing full time. I enjoy just connecting with people. So if somebody wants to reach out to me, they can email me at dan@investwithspark.com, or they can feel free to call me 925-917-4802.
Awesome. Well, you were clearly cut from a similar cloth as me. I love talking about real estate and personal finance and investing, and I can jaw all day about it. I won't though. We'll wrap it up. So on that note, guys, if you enjoy these quick, focused conversations that we have, please rate and review the show. It makes a world of difference to us. And on that note, we will catch you next time. Want the cash flow, appreciation, and tax benefits of real estate without becoming a landlord? You've heard of REITs and real estate crowdfunding, but you probably don't know much about 5 other ways to invest passively in real estate. So we put together a free video course for you to show you how to consistently earn 15% plus returns from 5 lesser known hands-off ways to invest in real estate. And even more importantly, we'll keep risk front and center in that whole discussion. Because really, what's the point of investing for high returns if you also take on high risk, right? So visit sparkrental.com/free to take our free course. Each video is snackable at 10 to 15 minutes long, and the entire course takes less time than watching a movie. Looking forward to chatting with you from within the course.